Legends, welcome. Hope you're well wherever you are. Welcome to the Daily Buyers Show. If you're new here, we deep dive crypto and all related markets as they relate to crypto. I'm here every day at the Bitcoin close, digging through the markets and sharing my approach and what I see. We focus on liquidity, we focus on macro, and we focus on Bitcoin and overall crypto trajectory, trends, structures. We stick to data. We allow for a little bit of speculation to essentially just to guide our thesis and thoughts about markets. But when it comes down to bias, we stick to the data. So a couple of posts that I've got up here on my X. We are in the volatility window. That's been the running theme leading into December. Don't get chopped. That's been my message, over the last week. This week and next week is going to be volatility, right? We've got the main volatility driver, which is FOMC this week. We have some key liquidity catalysts that, if they come to fruition, could drive a nice counter trend rally in Bitcoin and in crypto. But I want to make no mistake, the bias is bearish. Macro is bearish for Bitcoin, the macro structure. If we quickly take a look at Bitcoin structure, right? Just so I can quickly lay out my bias for anyone new here. If we look at the weekly structure, Bitcoin is bearish. At this point in time, when this low was lost, Bitcoin's weekly structure turned bearish. And Bitcoin doesn't do that when it's in a bull market, right? It usually maintains its weekly structure, doesn't turn bearish on the weekly unless we're transitioning to a bear market. There are some other key signals that I track with historical precedents, but also just market structure based, that help me determine my bias. We've got the weekly TT bands here, for example. When they turn red on the weekly, that confirms a bear market historically. When they turn green, that confirms a bull market. You can see that they're red now, right? And we're trading well below the bands. If you want these bands, just DM me on X and I give them to you for free. There's no rocket science here. They're just a couple of EMAs that I've scripted to change color based on the trend. Okay. But you'll notice when Bitcoin transitions in this way, where weekly structure shifted, the bands have confirmed that the macro trend has shifted. When you look at the most recent fair value gap, okay, I interpret order flow through fair value gaps. Go to my building block series on my YouTube and look at reading order flow via fair value gaps, and it explains how I interpret order flow through the fair value gaps. Well, Bitcoin historically never inverts the most recent buy side gap and starts closing below it when we're in a bull market. So we've inverted the gap. Weekly structures turn bearish. The bands have confirmed bearish, right? We've got so many points of confluence where if I was trying to be bullish here, I'm simply going against every signal that's telling me to be bearish, right? And that's a dangerous place to be. So what does that mean for crypto's next move? Well, if you remember how market structure moves, okay, in a bearish trend, lower highs and lower lows, it means that it still needs to have bullish counter trend rallies, okay, these are called retracements, to create the next waves lower, right? So just quickly on the market structure, when we're moving lower, these are the counter trend rallies. So if you're a counter trend trader, you'll be trading these moves. And if you're a continuation trader and you're trying to trade in the direction of the macro trend, in this example in Bitcoin, you want to be short, right? And you want to be catching these moves, okay? So if you just think about that, well, Bitcoin, since it flipped weekly structure here, hasn't made a new weekly high. Okay, and that's the basis of what we're going to cover in this session today, is the fact that many charts, like Bitcoin, haven't created their new weekly lower high before continuation. And when I piece together the liquidity picture, some of the macro charts, everything's pointing to the fact that we could get some type of decent counter trend rally. Now, I don't know exactly how high this counter trend rally will go. I don't think anybody can tell you exactly where it's going to go. That's the game of trading. That's the fun of trading. However, we know that if price is going to move lower, it needs to do one of these counter trend rallies before it then heads lower again, right? So for me, I've laid out my positioning many times on previous streams and my approach to markets at the moment. Yesterday, I sent out my weekly market update that's in Substack, and it is a detailed market update. It's usually geared to guide you on the week ahead and the coming weeks. We cover economics and liquidity down to the macro charts, my key thesis and what's driving my approach in markets, key signals, key patterns, right through to crypto macro, Bitcoin structure with key levels. You'll see here, these are some of the key signals I've laid out that confirm my bias being bearish. Okay. We cover everything in detail. So if you want to know exactly, I even cover positioning here and the main macro positions that I'm looking for. Right. So that's free. I do that every week. Jump on my X and you'll find the link to my Substack there. Okay. So if we just come back to Bitcoin, right, we know that this counter trend rally is potentially due. Okay. And the bigger macro trade then for continuation is to catch this move down to here. Now, given some of the catalysts on the horizon, again, highlighted in my Substack, but I'll just load up this post I put out on X yesterday, I believe it was. We do have a few catalysts. Now, these are speculated catalysts that could fuel the counter trend rally. QT ending. Now, the end of the week, I believe on Friday, we should get our next data, right? Data should fill in from Fred into TradingView, etc., which will show us movements in the balance sheet. Okay, so that's the balance sheet there, right? This is the Fed's balance sheet. So this is what's important for us to track. I'll actually just jump into it over here really quickly, right? We're tracking the Fed's balance sheet because QT ending, what we want to see is, this is the Fed's balance sheet. See, when the balance sheet expands, this is the money printing. This is QE, okay? That's what we want in order to see massive parabolas. QT ending just means that they're going to stop reducing their balance sheet. Now, it's not QE starting, so it's nothing that suggests that we should see an increase in the balance sheet, but at the very least, we should see the balance sheet flatten out, right? And that, in the shorter term, could provide some liquidity, or at least stop the drain of liquidity that's happening. So hence, this Friday, we should get our next lot of data, which will tell us if they've actually stopped QT, and if there's any other means of stealth QE or anything else, it'll show up in this balance sheet. Because Friday's data release will be the first lot of data for December, okay? And supposedly QT was ending in December. So that's what we're waiting to see. But as you guys know, if you've been keeping up with my streams and my channel, I built this net liquidity indicator that aggregates all of these key liquidity factors, such as the Fed's balance sheet we just looked at, the TGA, so the government's wallet, okay, because we want to monitor if they're spending versus their, refilling their wallet. When they're refilling their wallet, like they have been, liquidity often gets drained from markets, and we're sitting in at this $1 trillion level. and we want to see it come down, right? Now there's speculation of we're going into the most bullish year for juicing the economy, call it, with stimmy checks and tax cuts and the government spending via the big beautiful bill, right? That's all the speculation. This is what we need to be watching to see if they're actually spending, right? And again, I've built this all to aggregate through to net liquidity that gives us this nice signal that we can clearly see on a chart where liquidity expands. That's what drives parabolas. So, you know, if we're to expect some type of bullish price action, whether it's a counter trend rally from here to here, this is Bitcoin up the top, okay? Or if you're uber bullish and you're expecting some sort of price discovery, well, you need to see liquidity expanding, okay? You'll need to see net liquidity going like this. If net liquidity just flattens out, it's very unlikely that Bitcoin will achieve any type of new parabola or price discovery, okay? And, you know, at best, some type of relief or counter trend rally. If it gets a slight uptick before turning over, that could just align with short-term liquidity. And if it turns over again, basically it's telling us that liquidity is still moving out of the markets, right? Out of supply. So hence, we're monitoring net liquidity, because if we just keep seeing liquidity drain, we know that Bitcoin's going to follow. But if we see some type of, call it stealth QE, call it other things that the Fed does to stimulate liquidity or juice economies or essentially loosen policy, right? That's where, if we see it in net liquidity increasing, that's where we can likely expect more bullish price action for Bitcoin. Because Bitcoin is ultimately a signal on global liquidity. Really, it just functions as a proxy on global liquidity. When liquidity is loose and expanding, Bitcoin expands, okay? When liquidity is tight, as can be seen here, right? Tight, and is contracting, Bitcoin dumps, right? Typically goes into bear markets. Hence, that's the big signal that we're tracking. And these liquidity signals, to me, even based on what's speculated, it doesn't create the formula for a new parabola or a new price discovery. At best, it's short-term liquidity. And I lay that all out in my Substack. I won't go through it all on here. Okay, just jump through my Substack. So that's what's on watch, because if we now just come back to Bitcoin really quickly, right? The Bitcoin weekly structure, as I explained, okay, is bearish. We're waiting for the next weekly bullish retracement. Hence, this will be the counter trend rally. And dependent on how those liquidity catalysts come to fruition, the rally could go from here to here, it could here. It could even come right up to here without turning structure bullish. Because remember, to flip primary structure, we need to invert the most recent lower high. Okay, which right now on the weekly is up here. Okay, so basically Bitcoin can travel all the way up here in price action and structurally still be bearish. Now, if Bitcoin is trading up here, okay, will I still be bearish in my bias? Possibly, but I'd need to analyze price action as it develops. But I'll show you what I'm calling the flip zone, right? And I'll give you my logic as to why. So I'll throw this on the chart. This is what I'm calling the major flip zone. The context to this is, historically, like I mentioned earlier, Bitcoin respects weekly order flow gaps when it's moving in its macro trend. So you see here, back in the previous bull market in 2021, once it inverted the most recent order flow gap, fair value gap, okay, we were transitioning to the bear market, and then you can see it started creating its own gaps. And notice on the sell side, see how these gaps get respected, okay? So I'm always looking at that most recent gap. Then I'm looking at bands as well. Now, bands are always a lagging signal, so they're more of a confirmation tool, but I'm looking at the bands too, right? And as I mentioned, once the bands turn red, to invert the bands, for them to turn green again, price needs to get above them and find support into them, right? So you'll see here, when the bands flipped, every time price came into the bands, they provided major resistance until Bitcoin was ready to flip. So hence, when I look at price action currently, okay, that's where I'm drawing out this major flip zone, because it starts here on the weekly, where this is the most recent weekly gap. Hence, if we get above there, that tells us that there's some bullish order flow developing, and buyers may be stepping in to take control, okay? Then what I'm also then looking at is see how our bands are starting to separate, right? So we're going to be coming into those bands, and if we get above the bands and we're holding them as support, then that's going to build more probability for the bands to flip again, okay? Now, the other thing I'm looking at is daily structure. Now, in the way that Bitcoin moves, the primary daily structure holds usually 80% of the time, okay, when it's in a macro bearish or bullish trend, okay? So when you look at daily structure, for example, if I just come back here, right, the daily structure rarely breaks unless we're starting to flip on the, call it the swing leading to macro timeframes, right? So you see this run up here. Well, it's similar in bear trends again, okay? So if you're just tracking the daily structure, if you look at the way price moves, right, it doesn't flip. See how the lower highs are intact? It doesn't flip these key lower highs, right? Here was the major counter trend rally where it tested the lower high here, rejected, okay? And that was a massive short if you caught that one, right? And it respects these highs. So hence, when I look at the daily structure that's been created currently, right here, well, that's our current lower high holding down this bearish trend. So that's where I look at this objectively based on those three critical factors that I just described. And that's where I'll be observing price action if it moves into this area, because if we're underside losing momentum and then retesting and sweeping, okay, then I'll be more inclined to be looking for my macro short. So remember we talked about the direction, counter trend to continuation, right? This is the retracement to continuation. Well, this flip zone is my major target area for getting into that position. Okay, so this is where I'll be looking for the macro continuation short. So hence, as we get into this flip zone, I'll be observing price behavior. Whereas if we've built momentum, okay, and we're kind of cutting through this pretty easily, and we're coming up here and we're building some type of support and showing failure to break down here and pushing, then that's where I might start shifting my bias, okay? Because the historical signals and structure in the way that Bitcoin moves is giving me the right signs to flip my bias, okay? So hence this major flip zone is the area that I'm watching closely, and considering my macro bearish bias, I'll be eager to short here, okay, for continuation. And again, like I said, depending on how these liquidity catalysts come to fruition, you know, the counter trend rally might just be to here. It might be here. It might even be right up here. Okay, but this is the area that I'm planning for in terms of getting short again. Now, for the counter trend rally itself, we know that based on what I'm seeing in broader charts, so if we just go to Bitcoin dominance, for example, dominance has confirmed bearish, okay? with the weekly bands. It typically doesn't do this unless altcoins are going to consistently outperform. You see here, March 2021. Now, I know context is very different now, considering this was still part of the bull market, but it just tells me, even in the short term, if dominance just keeps rejecting here and we have a counter trend rally, okay, and even if it's a move from here to here in dominance, it still suggests to me in the short term, if there is a counter trend rally, that altcoins are going to outperform. And just another point of confluence on that is when I look at ETH to BTC, right? Again, these bands on the weekly, they rarely flip unless there's a major shift in the macro trend. Okay, so these bands is what kept me safe from ETH pretty much the whole cycle. I barely touched ETH when everybody was screaming through here that ETH's, you know, waking back up or about to take the lead. I never touched it positionally, right? Because I was waiting for confirmation. So these bands kept me safe. Now, if we look at ETH, the bands have crossed and it's exhibiting similar price action to what it's done historically, where we come to slam back into the bands, retest them before having a move. Now, again, layering in context, you know, this was leading into the bull market. We're on the other side of it based on structure and on all the other signals. So am I looking for a move such as this in ETH? No. Right? That would be unrealistic, and that would just not be the right approach or expectations given the context. I am looking for a move back to here, potentially to here in ETH, okay? When I look at ETH to BTC, and this is all going to be dependent on how hard we counter trend rally. So those are the signals that are telling me that to participate in the counter trend rally, altcoins are still going to outperform Bitcoin by the looks of the current signals. Right now, I've laid out in my Substack that I'm not spot positioning into anything, right? I've got no interest in spot for Bitcoin, for altcoins or anything right now. It's all just futures trading for me. So counter trend rally, I'm looking for a few trades to catch up into here, right? And then the moneymaker for me is going to be positioning into that next short on the weekly structure, right? So before we wrap up the stream, I want to just point out a couple of things, right? First and foremost, back to our favorite chart, stablecoin dominance, right? We didn't revisit it today, and we always need to at the present time. We're still stalled here at the key range high level, right? Just to jog your memory, trending back up here, deep bear market, Bitcoin and alts will go much lower, okay? This is our counter trend rally zone, here to here, potentially down to here max, right? That would stimulate massive crypto internal liquidity, okay? So hence, this remains on watch, because we come down into the daily, we're seeing some stalling up here, okay? But what we'd need to see is come below the bands, break down here, and this would be massive liquidity flowing in. So this is what I'm watching, because I want to see it down here and start trending down, okay? I don't want to be positioning down here, right? I want to be positioning when I know that this is breaking out, right? But again, if you've been keeping up with my streams, we're in the volatility window, so I'm not eager to jump into anything right now. I'm still waiting for this week to mostly play out, and then we can analyze price action, because I believe direction, the true direction is likely to come after the FOMC, after the press is digested, Jay Powell's comments, and then towards the back end of the week. But we've also can't forget that the Bank of Japan is a bit of a wild card at the moment, and we've got to consider that they've got their interest rate decision next week, and that could potentially shake markets, especially if they hike or they have a hawkish sentiment, because that Japanese liquidity underpins a lot of global liquidity. So that's on our horizon. Last but not least, I wanted to point out that when we look at alts, for example, look at the weekly chart, okay? Because when we go through altcoins, if you are looking to participate in any counter trend rallies, to me, right, it looks like, similar to Bitcoin, all of these charts, if they rally for counter trend, which looks like it's coming due because it's on these weekly charts, a lot of these have just been straight down, right? So they haven't developed their next weekly high. So the context for these counter trend rallies when it comes to trading them is, from a structural context point of view, these are most likely looking to develop their next lower high. Okay, so just have realistic expectations given the market environment. If you're trying to long Pepe, for example, because you think that Bitcoin's going to catch a bid and it's going to go to all-time highs, personally, I don't see it, and I think that's maybe a dangerous view. But if you just observe these structures and realize that, okay, the weekly's heading down like this and the last high is here, okay, so our area to play with these things is potentially, if you're a range trader, you're thinking, cool, so if we're going to make the next lower high, it has to be lower than the range high. So let me trade this thing from here to here, you know, and be getting out. If it makes this decent move, which is still, you know, a 2x move, 100% move, then you got to be considering that a lot of these charts are just the counter trend rally, I should say. These rallies are just to develop the next lower high on the weekly structures. So hence, I'm trying to steer you towards looking at the weekly chart so you can understand from a structural context that the next move is likely just to develop the next weekly lower high. Okay, see it? Beaten down, weekly lower high. Here, maybe it goes higher, tests highs, it depends, right? So depends what you're trading, but if you see that these things haven't made weekly highs in a while, and some of these coins, like WIF, for example, for it to move even just, right, if you're looking at this as a range, okay, and you got a mid-range here, and you can see weekly structures like this, right, this is an internal structure point here, okay, so the next weekly high is likely going to be between here and potentially here, right? So a move from current price to there is still 150% move. So it's still a huge move. There's still potentially money to be made, but you just got to have the right understanding of structure and context, because this isn't the environment that's going to do this, okay, in my opinion. However, as long as you understand that you could potentially trade from here to here, then you have the right expectations, hence you'll be setting yourselves the right trading plans. Right, if I just scan through a few more of these, you can see on the weekly gives a really clear picture on how these are beaten down to the point where they haven't developed their new weekly lower high yet. Okay, so yeah, see, same for all of these. I look at all of these and look at Bonk, for example, right? Weekly came down, hasn't really, you could maybe call this a weekly lower high, okay, but since there, it hasn't made a new lower high. So you've got from here to here to play with, okay? So even just back into the middle of this range, you've got potentially 150% to play with, okay? So that's my message of today's stream. Weekly chart. Observe the weekly charts. So look at this one, for example, Pengu, right? I like this of all the meme coins because it seems to still have attention, and it seems like their founder and team are actually very business savvy. Okay, so hence, if this thing catches a bid, the last weekly high was here, right? So you've got a massive range to potentially play with, right? So weekly structures, legends, weekly structures. That's it for today's stream. I'm trying this shorter format where we don't go through every chart. Yesterday we went through a lot more of the macros, so if you need to catch up on any of the macro macro charts and economics, economic events, liquidity, jump into yesterday's stream, or just jump on my Substack. Please give us a like, comment, follow, all that kind of stuff. Really helps the channel, supports the channel. Please follow me on X, and I'll catch you on the next one. Cheers, legends.